The Brisbane property market is a place of contradictions at the moment. It's currently a national leader on price growth at a time when sales activity is below par. This dichotomy arises because of one of the dominant factors driving real estate in this era of higher interest rates, which is shortages of everything. There's a serious shortage of listings of properties for sale, an undersupply of new dwellings under construction, and a chronic shortage of homes for rental. These imbalances in the Brisbane market are pushing up sale prices and rentals. CoreLogic's Home Value Index, published on the 3rd of July, indicates that Brisbane house prices rose 1.3% in June, with prices up 3% in the June quarter. These growth rates are the second best in the nation after Sydney. And at the current growth rates, Brisbane will soon overtake Melbourne in terms of its median house price. Now, the city's apartment market is also strong. The median unit price rose 1% in June and 3% in the June quarter, and again, only Sydney has had better growth than that. Other research sources also record significant price growth for Brisbane, with SQM Research recording 5% annual growth in the city's prices index for houses and 17% for units. Rents also are strong, with house rents up 10% and unit rents rising 21% in the past 12 months, again according to SQM Research. With vacancies hovering around 1% across Brisbane, rents are set to continue rising across the Brisbane market. Now, the Brisbane market continues to be boosted by multiple factors. The first one is population growth from interstate migration. The second is the impact of preparations for the 2032 Olympics. And thirdly is the city's affordability relative to Sydney, Canberra and Melbourne. A recent analysis by id.com.au shows that Brisbane is the fastest growing capital city in Australia, while other data shows that Queensland has led the nation on population growth for the past 3 years. Brisbane and Queensland make the biggest gains from internal migration, which is people relocating from other parts of Australia, by a wide margin. Research shows that host cities for Olympics experience significant uplift in their residential property markets, with the greatest impact actually occurring in the years leading up to the event rather than afterwards. The key factor is the investment by government and private enterprise in sporting, transport and hospitality infrastructure, which creates enormous economic activity and employment, and that translates into demand for houses to buy and to rent. Brisbane's investing over $2 billion to revamp the Gabba as the main venue for the Olympics, with billions more being poured into other infrastructure which is already under construction. Now, Brisbane, with a median dwelling price of $725,000, compares favourably on affordability to Sydney, where the median dwelling price is over $1 million, Melbourne, where it's $760,000, and Canberra, where it's $830,000, although Brisbane is closing the gap on Melbourne. Brisbane still offers suburbs with median house prices in the $400,000, which is a commodity no longer available in those 3 more expensive cities. Brisbane also offers attractive affordability in its inner city apartment markets, a sector which is likely to be boosted by the Olympics impact, which, based on the experience of previous host cities, includes greater price uplift in the suburbs closest to the main event venues. And most of Brisbane's key event venues are clustered around the CBD and precincts such as Wollongabba, South Brisbane and Roma Street. Accordingly, the Brisbane Olympic Precinct, as we call it, is the #1 pick in this edition of the Top 5 Brisbane Hotspots report.